All right, let's talk about something that can feel, well, just incredibly overwhelming. Trying to find the best term life insurance. It's a huge decision for your family's future, but the market is just flooded with options. Where do you even begin?
Sound familiar? You start looking and bam, you're hit with this wall of different companies, all this confusing jargon and plans that seem designed to be complicated. It's so easy to just get stuck, in that analysis paralysis and decide to deal with it another day.
Look, you're not alone. That's exactly why we're doing this. We are going to cut through all of that noise. No marketing fluff, no confusing language, just a completely transparent, data-driven process to see who really comes out on top. We're letting the numbers do all the talking. So here's how we're going to do it. We call it the four-filter gauntlet. It's pretty simple, really. We're starting with 21 major insurance companies, and we're going to run them through four really tough tests. With each filter, any company that doesn't meet our pretty high standards gets eliminated, until only the best of the best are left standing. Okay, so now that you know the game plan, it's time to get started. Let the eliminations begin. Here they are, our starting lineup. 21 of the country's biggest life insurance providers, all at the starting line, ready to enter the gauntlet. First up, our first filter is the one you've probably heard of, the claims settlement ratio, or CSR. It's simple enough. It just measures what percentage of claims a company gets in a year that it actually pays out. It's a really basic, fundamental first check on whether a company does what it promises. Now, the industry average is actually pretty high at 98.66%. But honestly, when we're talking about your family's financial security, we think pretty good just doesn't cut it. So for our test, we're setting the bar higher. We're demanding a minimum of 99%. Only companies that settle at least 99 out of 100 claims are moving on. And boom, just like that, with only our very first filter, 11 of the 21 companies are immediately knocked out. More than half the field is gone already. That leaves us with just 10 contenders. All right, on to filter number 2. Now, this is a metric that most people don't talk about, but it's arguably even more important. It's the amount settlement ratio, or ASR. This doesn't look at the number of claims paid, it looks at the total value of those claims. And trust me, this is where the real story starts to come out. So, why is this ASR thing so important? Well, because a high CSR can actually be super misleading. A company can keep a great-looking CSR by just approving tons and tons of small claims, 10, 20 lakhs, while quietly rejecting a few really big ones, like claims for 2 or 5 crores. It keeps their stats looking good, but they're saving a fortune by denying the families who need it the most. ASR pulls back the curtain on that little trick. Now, the industry average ASR is a kind of shocking 94%. That tells you that, as a whole, the industry has a tendency to reject larger claims. So we're setting our standard at 95%. And by applying this filter, 2 more companies get the axe. We're down to 8. Okay, so a great track record is one thing, but it doesn't mean much if the company isn't financially stable enough to survive a crisis, right? That's what the solvency ratio measures. It's a company's ability to pay all its claims over the long haul, especially during something huge like a pandemic, when claims could suddenly spike. And for consistency, we use a 4-year average. The insurance regulator says companies need a minimum solvency ratio of 1.5. But you know what? We're not looking for a company that's just scraping by, meeting the bare minimum. We want companies that are rock solid. That's why we're setting our standard higher, at a minimum of 1.8. And just by insisting on that higher standard of financial health, 2 more providers are cut from our list. We are now down to the final 6. For our fourth and final filter, we're looking at size. The annual business volume is basically the total premium a company collects in a year. And in the insurance business, believe me, size matters. It's a huge advantage. Bigger companies are like giant ships in a storm. They can absorb shocks better, spread risk more effectively, and that means more stability for you over the long run. Now, I know what you might be thinking. Are you just picking these numbers to get a specific result? And that's a fair question. So check this out. We set our threshold at 5,000 crores in annual premiums. But as you can see, it doesn't matter if we set that bar lower at 4,000 crores or way higher at 9,000 crores, we still get the exact same 2 companies at the top. This process is robust. So, with our chosen threshold of 5,000 crores, 4 more companies are eliminated from our list of 6. The gauntlet has been run, and after all that, only 2 remain. So, After that really intense 4-stage elimination process, it's finally time to reveal the 2 providers that passed every single one of our tests with flying colors. And the winners are Max Life Insurance and Tata AIG Life Insurance. These are the 2 companies that consistently prove they have high claim settlements, incredible financial stability, and the massive scale needed for long-term security. They didn't just meet our high bar for paying claims, they proved they pay out the big ones too. They're financially solid, and they're big enough to be there for decades to come. But hold on, we're not done yet, because choosing the right provider is really just step 1. Now you have to build the right policy, and that means understanding something called riders. Think of them as power-ups for your insurance. Let me put it this way. Term insurance protects your family if you're gone. But what protects them if you get really sick or have an accident and just can't work anymore? That's where these riders are absolutely crucial. The critical illness rider is a lifesaver. If you're diagnosed with cancer or have a heart attack, this rider pays you a big tax-free lump sum to replace your lost income. It makes sure the mortgage and the bills still get paid while you focus on getting better. And the disability rider is just as important. If you become permanently disabled, it can waive all your future premiums, so your cover continues for free, and it can even provide you with a steady income. These riders protect your income and your life, not just your death. Okay, so now you know who to look at and what to add to your policy. Before we wrap up, I want to leave you with 2 final, absolutely golden rules that every single insurance buyer needs to follow. If you only remember one thing from this whole thing, please, let it be this. When you fill out that application form, be radically 100% honest. If you smoke, even just occasionally, or you have a drink now and then, you have to disclose it. Yes, your premium might be a tiny bit higher, but trying to hide it is the absolute #1 reason that claims get rejected down the line. An insurer can and will find out, and the policy you've paid for years could become worthless right when your family needs it most. Their future depends on your honesty today. And finally, I want you to think about this. Your term insurance premium, it's pretty much the only bill you will ever pay that is guaranteed to never, ever increase. The price you get today is locked in for the entire term, while the cost of everything else in your life, your rent, your food, your phone bill, goes up year after year. This one bill will stay exactly the same. So the question isn't just if you should get it, it's when are you going to lock in that price for good?